Listen to me, because nobody else in the financial industry is going to tell you the raw, unfiltered truth about this. Every single day, I see people who are 5 years away from retirement, or who have already punched that clock, watching the news, seeing high inflation, seeing stock market swings, and absolutely panicking. You are terrified that the nest egg you worked 40 years to build is going to shrink right when you need it most. So what happens? You open your mail, or you look at your computer, and you see these slick advertisements telling you to move your money into a Gold IRA. They tell you it is the ultimate safe haven, that paper money is dying, and that physical gold is the only way to save your retirement, and you start thinking, should I do this? Is this the answer? Stop right there. Before you move a single dime out of your hard-earned 401k or traditional IRA, you need to understand exactly what a Gold IRA is, how it works, what it costs, and most importantly, whether it makes any sense for your financial life. Let's break down the problem first. As you approach retirement, your primary goal shifts from growing your money aggressively to protecting what you have already earned. When inflation stays sticky and paper assets feel volatile, people naturally crave something real. You want something you can touch and feel. That fear is normal. Now, here's where people get totally confused, and this is the big question I get all the time. Susie, if I buy gold in an IRA, can I keep it in my safe at home under my bed? No! Absolute, categorical no. If a company tells you that you can set up a home storage Gold IRA, run for the hills. That is a fast track to an IRS nightmare. IRS regulations strictly mandate that physical precious metals held inside an IRA must be stored in an IRS-approved, high-security depository facility. If you take that gold home, the IRS considers it a full distribution. That means if you move $100,000 into gold and bring it home, you will owe income tax on that entire $100,000 immediately, plus early withdrawal penalties if you aren't 59 and a half yet. Do not fall for that myth. So, how does a Gold IRA actually function if you decide to do one? First, you open a self-directed IRA with an approved custodian. Second, you fund it. The cleanest way to do this is a direct, custodian-to-custodian transfer or rollover from your current traditional IRA, Roth IRA, or old employer 401k. When it is done directly, you pay zero taxes and zero penalties. Third, you work with a precious metals dealer through your custodian to select IRS-approved gold. The IRS requires gold bullion to be at least 99.5% pure. Certain coins like the American Gold Eagle qualify, but collectible coins or coins you already own in your personal jewelry box cannot be placed in a Gold IRA. Fourth, the dealer ships the gold directly to the secure depository, where it sits under armed guard until you take distributions in retirement. Now, let us talk about the true costs, because this is where the financial industry eats away at your security if you aren't paying attention. When you buy an index fund in a traditional IRA, your annual fees might be practically zero. But physical gold is heavy, it requires armed security, and it requires insurance. With a Gold IRA, you are going to pay 3 distinct layers of fees. Number 1, an account setup fee to the self-directed custodian. Number 2, an annual administrative fee. Number 3, an annual storage and insurance fee to the depository. On top of that, gold dealers charge a markup, a spread, above the actual spot price of gold when you buy, and they take a discount when you sell. Total ongoing fees can easily run hundreds of dollars every single year, regardless of whether gold goes up or down in value. If you only have $20,000 or $30,000 to invest, those fixed fees will eat your account alive. And here is another major reality check: gold does not produce income. It doesn't pay you a quarterly dividend like a solid dividend-paying stock. It doesn't pay you interest like a treasury bill or a high-yield savings account. The only way you make money on gold is if someone else is willing to pay you more for that physical metal down the road than you paid for it today. When you are retired and you need monthly cash flow to pay your power bill, buy groceries, or cover medical costs, an asset that pays zero income requires you to sell pieces of it to get cash. When you reach required minimum distribution age, the IRS says you must take money out of your traditional IRA accounts. If your money is in a gold IRA, you either have to sell your gold to get cash to meet your distribution, or pay shipping and processing fees to have physical gold coins sent to your house, which will then be taxed at your ordinary income tax rate. So what is your actionable takeaway right here and right now? If you are determined to hold gold because you want to hedge against economic chaos, limit it. Never, ever roll your entire retirement nest egg into gold. Most financial planners will tell you that if you want precious metals in your portfolio, keep it to no more than 5% to 10% of your total liquid net worth. Furthermore, ask yourself if you really need the complexity of a gold IRA. If you just want gold exposure without the heavy storage fees, custodian fees, and markup hassles, you can easily buy a low-cost gold exchange-traded fund, ETF, inside your existing, regular IRA at any major brokerage firm. You get the price movement of gold, instant liquidity, and zero depository fees. If you still want physical gold in a gold IRA, demand a full written schedule of every single fee before you sign anything. Ask about the setup fees, the custodian fees, the depository fees, and the dealer's spread. If a company tries to pressure you with fear-mongering tactics or promises free silver or free storage, walk away immediately. Nothing in the financial world is free, those costs are just hidden in higher markups. Protect your peace of mind, protect your hard-earned dollars, and make decisions based on facts, math, and clear logic, never out of fear. Stand strong, stay informed, and keep your financial future safe.